So as I mentioned, we've actually seen a few companies out with results today. Market not really going anywhere. Are you expecting this kind of trend to continue into the next week, Bankole, given the fact that we're starting to see a bit more clarity when it comes to the health of the banks?
Yes, it was just a marginal inch up despite positive results coming out for the Nigerian Stock Exchange. What we've been seeing since last year is that people would rather come in a speculative manner, buy some stocks, and then when there's some profit on it, take their profits and invest in some other sectors within the Nigerian Stock Exchange. And that's for those who stay behind. Most people would rather put some funds in fixed income security where yields are still very high and attractive. But in the Nigerian Stock Exchange today, we saw Dangote Cement finish very well, and then Nestle too did very well. We've seen good results from both companies too, apart from the banking stocks that have also done well. Basically, the inch up was caused by speculators who are probably buying into the next quarter, really. You will see sell downs at maybe month end or the end of the quarter, basically.
Let's look at how the yields are actually trending in the secondary market. We've seen them dropping quite a bit. Is this also going to be something that we can expect into the future?
Yes, just like I said earlier, there's still some aggressive level of demand for T-bills in particular at the moment. FDIs, and then even on the local scene, we're seeing investors trooping on a daily basis, even individuals doing some very small amounts. People taking off their money from fixed deposits and all forms of saving schemes that earn them lower than 10%. T-bills interest are between 14 and 15% right now. 91 days stopped at 14% on last week primary auction, and then 182 days stopped at 14.942. The 1 year stopped at 15.07. Basically, the CBN is willing to pay between 14 and 15% for treasury bills. But what has happened on bonds is that the calendar has just been issued of how much the government will be borrowing locally. And this in itself has caught the market by surprise. It caused a shock. Initially, it was a bullish market in the bond secondary market, but we've seen a reversal of people selling down some of their stock, because with the high volumes the government is going to issue, we expect that yields will go up compared to the 15.3, 15.0 levels they are now at the secondary market, basically.
Okay, so let's also look at the FX market. We've seen a lot of stability coming through. Oil majors continue to sell as they earn. What is your sense? I mean, do we have more potential to strengthen?
Yeah, despite the government intervening just once this week. Usually the government will sell twice, on Monday and Wednesday. But because of the public holiday, we had just the Wednesday sale. The value of the Naira has risen up against the dollar about 10 kobo today at market close. Market closed at 157.30, 30.40 on the offer. Basically, oil companies continue to sell on a weekly basis. The concern or the thinking right now is that the Naira will continue to gain or be stable anyway. So people would rather sell their dollar holdings and keep Naira, and then invest even in Naira securities, basically.
With regards to the T-bills and the issuance thereof, we're seeing maturities coming to the fore. We also have been seeing that the market system is, however, still very much in credit. Are you expecting this trend to reverse?
Sorry, come again?
With regards to the money markets, we've seen it very stable when we see the T-bill issuances that have come through, also the matching maturities. Are you expecting this kind of stability to continue, because the market is still very much in credit?
Yes, we expect the relative liquidity to continue, because though 180 billion worth of T-bills were issued, that same amount of treasury bills also matured, so really it nailed off each other. And then yesterday there was an OMO auction in order to mop up some excess liquidity of over 80 billion. But as we speak, system credit is still up to 70 billion, and this is probably enough to take us to next Wednesday, where debits will be made for the next WDAS for Wednesday. I mean, T+2 transactions on Monday will settle on Wednesday. I know that by next week, Federal Allocations Committee would also meet to determine an amount to be issued into the system. So by the time illiquidity creeps in, we expect another fund coming. Last week, before the public holiday, there was an excess crude amount that was shared. of about 106 billion too. These monies are still in the system, really keeping the rate steady at 14% levels. Yes.